More numbers today. Today, we're going to take a look at the numbers from now to the end of the decade, what we think Tesla is going to do, what I think Tesla is going to do in terms of average numbers year over year over year. These will be different than the numerical unit sales that I gave you yesterday. This is going to be based on statements by Tesla, by their own projections, their own estimates. Everything I think here can be verified by things that Tesla have said. Having said that, sometimes you have to extrapolate or interpolate or do other things and project, but I'd love to hear your comments. This is Randy Kirk, and if this content is valuable to you at all, then certainly you could like this and you could subscribe. You're going to want to show up tomorrow, so you want to subscribe and be notified, because tomorrow I'm having Scott Walter and maybe John Gibbs, John Gibbs on to talk about everything that's happened on the Optimus robot since March 1st on Investor Day. It's going to be a huge show. It's going to be amazing. You'll definitely want to be there for that show. Okay, let's dig into the numbers. Let me share the screen. You guys all know how good I am at the screen sharing stuff. It says share, and then there it is. Okay, so here we're going to go through this line by line. This is going to be, okay, first of all, understand, I don't get into the details. Guys that get into the details are really kind of kidding themselves. Everything I'm going to show you today, as I mentioned, is based on what Tesla has said or what we can speculate or project from what they've said. When you start getting into the details about what the overhead is going to be in any given year, what you think is going to be the total sales of this little division or that little division, it's really kind of nonsensical to me. I've done this for my own companies my entire life. With spreadsheets out for 3 years, they usually turned out to be so wrong that it was hard to imagine how I came up with the numbers in the first place. And so taking the gross numbers, the best I can from what Tesla has said, is all I'm going to do here. And I'm going to show you the how I got there. Okay, so let's start with car units. Okay, so car units in 2023 are going to be 2.241. That is the number I came up with yesterday and put out yesterday. Okay, but from there forward, what I've done is I've tried to project a normal smooth growth curve to 20 million in 2030. So these are not my projections based on looking at factories, based on looking at how they're expanding on any particular product lines, as I did yesterday with the 2024 numbers. This is based on a starting point in 2023, the 2.241 million. I don't see how they do less than that. I'm still waiting for one single person out of all the responses and comments that I got yesterday from Twitter, from anywhere. Nobody yet has said, Randy, here's where you were wrong about your 2.241 million. I'm waiting. Come on. If you saw something wrong, please tell me. This information is all up on my Patreon. So if you want to join the Patreon, it's only $5 a month. You can see this chart. You can see my calculations, the formulas that I've used, but I'm going to show you the formulas right now. Okay, so now that's just a nice little curve going out. All right. Next is dollar per car. This is my guess. This is my projection. I think it's going to be around 44,000 this year. Last year it was around 50. It's going to come down because they've dropped the prices by 20%. I think there will be some increases in these prices as the year goes on, 500 here, 1,000 there, as we've already seen a few of those. I think that there will be maybe some folks are going to increase. They're going to get the next better car because they can afford it now. So that's going to have a little bit of a push towards the better range of the cars as we go through the year. But that's going to be for 2023. In 2024, I think that they'll continue to raise prices. We'll see some recovery back closer to $50,000 per car. But then it's going to go down a lot starting in 2025 because the $25,000 car will come in. They will have used up as much of the cyber trucks, the $100,000 and $80,000 and $70,000 cyber trucks. Those folks will be satisfied. They'll be selling a lot more $45,000 and $50,000 cyber trucks. So I think overall it's going to drop to 40,000 in 2025. And then it'll just continue to drop down as you go through 26, 27, all the way to 30, because you're just going to have way more of these $25,000 vehicles. We're talking about up to 10 million of those. Now, remember, none of this takes into consideration any additional money from uptake on FSD. None of this has anything to do with people being able to actually, drive from their backseat, and therefore the uptake would obviously increase. And it has nothing to do with going to some kind of an automated car, a robo-taxi system. That is all separate. This assumes none of that happens, that all they do is sell a lot of cars. And, Gary Black and others are saying, well, how do you get to 20 million? You get to 20 million because there's not going to be any other car company that's even aspiring to get to the kind of numbers that are going to be necessary to satisfy the demand. So even if Tesla's cars weren't the best on the market, they're going to be the most plentifully available, because look at, only BYD, funny slip of the tongue, only BYD is even aspiring to the 5s and the 6 and the 7 million. Pretty much everybody else is like, well, yeah, we hope to make 2 million by 2026 or 2027, or, nobody else is looking at these kind of numbers. I think there's a couple, Geely and Kia, Hyundai, Kia also might be looking at some pretty significant numbers, but to get to 65, 70, 75, 80 million a year, nobody is going to be making enough of them based on their own statements, their own factory openings, their own projections. Nobody's going to be making enough of them. Only Tesla is putting the productivity in place to be able to hit 20 million by 2030. And this is based on reaching that goal. All right. So the dollar per car is going to come down. The next is auto revenue. That's just a multiplication of the one by the other. The next is, we're going to go to energy revenue at this place. Okay, so my energy revenue for 2023 is based on 30 gigawatts deployed. If there's 30 gigawatts deployed at $500 per kilowatt hour, that would be a total of $15 billion in energy revenue for 2023. And the operating profit on that, if you look at my formula, is, well, you can't see that, but I'm using that it's only 25% of D5, of this number here, the energy revenue. But immediately in 2024, I increased that to 40%. So that's assuming that there's still making some product in Reno, assuming that there's cost to the ramp, everything else, I'm putting it at 25% for 2023, but then it'll go to 40%, and I continue that 40% number all the way out to 2030. Now, this ramp, the total revenue, the total gigawatts deployed, is based on Tesla's statement that they want to be at 1 terawatt as fast as possible. And that they specifically said that doesn't necessarily mean 2030. So I believe that they're going to hit this 1 terawatt before 2030, but this particular ramp assumes they get to it in 2030, and that they continue to be able to get $500 per kilowatt hour. That may not be true. It may only be $400 a kilowatt hour, or who knows what the number might be, but I'm assuming $500 all the way. Okay, so then auto operating profit for this, I'm assuming a 15% in 2023, because we know 2023 is going to be a more difficult year. What were we told at Investor Day? Watch the operating profit, forget about the gross profit on auto, start looking at the overall operating profit. My belief is that Tesla intends to move that operating profit back into the 17 to 18% range, maybe even going into 19% as we get closer to the end of the decade. And so that's what this is reflecting. So in 2024, I have it going back to 18%, in 25, still 18, in 26, still 18, and then in 27, going to 19, and all the way to the end of the decade at 19%. Did I make a mistake here? I might have made a mistake here. I did. I'm very, very sorry. Let me change that to 19%. So looking at automotive revenue at 19% all the way to the end of the decade. Okay, so then that would give the total, when you add that together, the stock price would be figured at 50 PE With this kind of growth, it should be at 50. And this is based on 3 trillion shares, 3 billion shares outstanding. So it's just a multiplication of the a combination of the auto profit and the energy profit, nothing else. Okay, nothing else in there. Nothing for the robot, nothing for Optimus, nothing for the robotaxi fleet, nothing for superchargers, nothing for megachargers, nothing for anything else. Just the automotive and the energy storage. You would end up with stock price at 309 based on the current year. So not future, not past, but the current year at 309 going to 675 and to 5360 by 2030. So $5,360 per share by 2030 if they just hit these numbers, which they're telling us that they're going to do. What else isn't in there? Oh, IRA net incentive income. Okay, so we know there's going to be income. It's going to be a lot. I just threw in a few numbers there. This particular number at 7 billion is just a flat number, just the total gross amount. If you want to divide that by 3, then you could get, $2 a share. I think, is that right? Did I do that right? I probably didn't. But anyway, you can do your own multiplication. The IRA net income is going to be going up every year unless they stop it. I personally think that Congress is going to have to come in and stop it. I personally think that they never anticipated how big this number is going to get, and that so much of it's going to be going to Tesla. I don't think that was ever on their mind. I think that they're going to be getting a lot more unhappiness from Europe in terms of how this is going to affect European sales to the United States. I think there's going to be a lot of problems with this. I think that Tesla cannot count on this going forward. So you notice that I end it after 2025. But that's just one more thing, one more piece of income that is not being taken into consideration on this analysis of where the stock is going to go, where the numbers are going to go, where the dollar profits are going to come from. And I'm just asking the same question I did with the numbers issue yesterday. Where am I wrong here? Where am I completely being the total optimist and just going off the rails? Again, you could say, no, Tesla won't do 20 million. But my question is, then who's going to do them? If you can buy a $25,000 car that basically does everything that a Model 3 does, it's just smaller, but it has all of the same capabilities. It's the safest car on the planet. It's equal to all the other cars in terms of safety. It drives like a dream. It has the possibility of full self-driving, and you can buy it for $25,000, making it way better than any other $25,000 car on the market. And you never have to take it to the service station for gas, and you never have to take it in basically for much in terms of maintenance. Who's going to want to buy an ICE car? So at a certain point, the demand for BEV cars is going to be so great, and the demand for ICE cars is going to be almost zero, that people are going to buy whatever is available. And that means that lots of bad cars, there may be some lousy cars made by some of the, compared to Tesla, at least, there may be some cars that are not nearly as safe, nearly as much range, nearly as quick, nearly as, they just won't have, the software won't be as good. So there's going to be cars made by all the legacies and some of these startups that won't be anything close to as good as Tesla, but they will still sell millions of them because they will be available and they will be so much better than an ICE car. But there's one company that's putting in the capital right now. They're spending the money to open the factories that will allow them to be in a position to make 20 million cars. No other factory is. It's just as simple as that. If General Motors or Ford or Mercedes or even BYD or some of the Geely, however you pronounce it, even some of the ones that are more aggressive, if they started tomorrow, they're so far behind Tesla in terms of putting in the productive capacity. So I'm hoping maybe Gary will read it. Maybe Gary will listen to this video. Maybe you could send it to Gary. Let him know this is why. It isn't just about the pure demand It has to do with the fact that ICE demand will be zero. There'll be nobody interested in ICE cars anymore. Where am I going wrong? Comments below, please. If this is useful and helpful, please, give me a like or give me a subscribe, but mostly join Patreon. This information is up on Patreon. You can go look at it. You can go actually create your own chart to the right. It's interactive. You can make a copy, put it off to the right, and then put in your own numbers if you want. Patreon is only $5 a month. I'm putting up stuff like this all the time. A lot of the videos are going up early. In fact, this one is going up a day ahead so that my Patreon members will see it a day ahead. So, but I'm mostly, number one, I want to hear the comments. Which one of these numbers, are any of these numbers just crazy? That's what I'd love to know. Hey, it's been great talking to you.